In the summer of 1929, a shoe shiner in New York gave stock tips to his customers. That was normal. Taxi drivers talked about shares. Waiters borrowed money to invest. Families believed the stock market was a shortcut to wealth. America felt unstoppable. Factories were running. Cities were growing. The future looked guaranteed. Then, one autumn morning, everything broke. Not slowly, not politely. Confidence vanished. And with it, the American economy collapsed. This was the beginning of the Great Depression, and the reason it still matters is because it didn't start with poverty. It started with belief. October 1929. Wall Street opened like any other day. Then panic spread. Stocks fell, then fell again, then crashed. Men who were rich on paper yesterday were bankrupt by sunset. Banks stopped answering phones. Investors begged to sell. No buyers existed. The stock market didn't just lose value, it lost trust. And when trust leaves the financial system, money stops moving. That's when a recession becomes a depression. Back then, banks weren't protected. No insurance, no safety net, no second chances. When rumors spread, people ran. Lines formed outside banks, not to invest, but to survive. A man could work 20 years, save every dollar, and lose everything in one afternoon. When banks collapsed, businesses lost credit. Workers lost jobs. Families lost homes. The economy froze, not because people didn't want to work, but because money disappeared. The Great Depression wasn't an accident, it was built slowly. Americans borrowed too much, speculated too hard, trusted too blindly. Wages stayed low, production stayed high. Debt filled the gap, and the Federal Reserve, instead of saving the system, tightened it. Interest rates rose. Money supply shrank, deflation crushed spending. The lesson was brutal. When debt replaces income, and confidence replaces discipline, collapse becomes inevitable. Recovery didn't come from hope. It came from change. The government stepped in. Banks were regulated. Jobs were created. Social Security was born. Financial rules were written. Pain forced America to rebuild smarter. The Depression ended. But it left scars that shaped generations. People who lived through it never trusted markets the same way again. Now pause, look around, record national debt, expensive housing, stock market speculation, consumers living on credit. Sound familiar? This doesn't mean another Great Depression is guaranteed. But it means the conditions rhyme. Today's system is stronger, but also more complex. Banks are safer. The Federal Reserve reacts faster. But confidence is fragile. And confidence always breaks suddenly, not slowly. If it happens again, it won't look like breadlines. It will look like permanent financial stress, high living costs, weak job security, asset price instability, wealth inequality, not collapse, but slow economic suffocation.
The Great Depression teaches one timeless truth: the economy doesn't break when people are poor. It breaks when people believe risk is gone. Smart Americans don't fear history. They learn from it. Because those who understand cycles don't panic when confidence fades. They prepare.